Nick, you talk about tough trading environments over the 6-month period to January, really due to a stagnation of new build projects in the private and public sectors, but you still managed a strong rise in profits. How come?
I think there's a couple of factors taken into consideration. We were coming off a low base. The first 6 months of the previous financial year were not great for us. We've had a very nice turnaround in Centaurus, which is our operation in Australia. We've managed to hold costs pretty tight on the tile side of the business and managed to increase margins slightly there. But you've got to offset it against a very poor performance from the sanitary ware side. So good signs on the tile side of the business, but not so good on the sanitary ware side of the business.
And when would you expect sanitary ware to start catching up with tiles? I mean, what's holding that back at this stage?
The holdback there was a combination. We weren't experiencing as good a demand as we've started to experience on the tile side because of the renovation market starting to kick for us. So the government spend on sanitary hasn't helped with the new housing rolling out on that side. There's been no good signs in terms of private residential rollout of housing. And then on top of that, we took a strike at the Better Sanitary plant that lasted nearly 3 months, which also affected profitability.
Well, of course, you do mention in the results that the renovation market started to pick up towards the end of the period, so towards the end of January. Has that continued into the second 6 months?
Very much so on the tile side of the business. We're seeing the renovation market really kick through on the tile side, but not pulling through on the sanitary side.
When people are retiling the bathrooms, don't they put a new loo in at the same time?
Generally not, and renovation doesn't mean just necessarily bathrooms. Guys, people retile kitchens, lounges, dining rooms also get tiled.
Mm-hmm. How about new builds? Is there any sign of a recovery in sight for that market? When do you start to see that picking up?
There are some signs on the new building plans passed that there's some sign of an uptick there. But my read is we won't see that pull through into real construction until sometime in 2011.
Well, you talked about the inefficiencies at Better and Aquarius, constrained demand, lower production levels, and also the strike action, which you did mention. What sort of actions have you taken to counter the problems there?
Well, the first thing we did was obviously settle the strike, so that's now over. What we've done is really revisit our product ranges in that plant. We've invested heavily into automation, so we need to focus on high volume, value for money type product. So we've cut back the production range at the top end, the product range at the top end, and we're now focusing really on the core of the business, which is high volumes.
Talk to us about maybe the turnaround at Centaurus. And of course, we know that Australia never actually entered a recession. So has the consumer been in a stronger state in Australia? And what have you done to turn that operation around?
The consumer definitely has not felt the recession as in the rest of the world because tax breaks were offered to the man in the street in Australia rather than corporate tax breaks to help stimulate the economy. So that helped from a demand point of view. We've also done very well into government projects in Australia where our products started to be specified because it's seen as an Australian product, so that's helped. And then on top of that, we really aligned the business with the customer's needs in terms of aligning our production planning and our forecasting systems in aligning them really with what the customer was saying they were going to buy going forward. And we managed to get that connect working pretty well through the wholesalers in Australia. So that's really what's helped us.
What sort of percentage does Australia make up of sales and of profits? Is it a significant part?
It never was. It's now become just about 15% of our turnover and a very similar number in terms of profit contribution.
And would you expect that to continue to grow as that turnaround gains traction?
I've always been of the opinion that we can probably do better margins in South Africa than in Australia. So in terms of profit, probably not in the same vein, but in terms of turnover, it should be able to maintain those numbers.
Now, your inventories have come down by about 30 million rand. Sales volumes outstripping production. Is that a temporary measure, temporary issue?
There's something that's hidden in us in terms of we also took a strike at 2 of our tile plants during the period. So that also inhibited production to a degree. Although we did say a year ago that we're going to focus on reducing inventory levels. So the strategy has worked.
So you're happy with inventory levels where they are at the moment?
Inventory levels at the moment are exactly where we would like them. I think in Australia we still need to do a little bit of work to reduce them further.
And when would you expect production to be back at full capacity?
On the tile side of the business, we think by August, September we'll already be back at full capacity in South Africa. We're very close to full capacity in Australia. The challenge really is on the sanitary ware side where it's probably going to take us another year to get that back to full capacity.
How about imports of tiles? Do you import into the South African market? And if so, how has the rand affected you? Because of course we know the rand has been quite nice and strong over the past year.
We don't import at all. In fact, a lot of our customers import. So import is really our competition. We benchmark ourselves quite aggressively in terms of Chinese pricing and India and Middle East. and we make sure we stay competitive with importers.
Well, you did say your margins had managed to pick up a little bit. Have you been putting some inflation through on your prices over the past 6 months?
It's not really an inflationary increase as per se. What we really do is look at the ranges, and where we find products that work in the market, we can obviously get a bit of a premium on those products.
Public sector programs, when would you start to see those picking up as well, and maybe giving some initiative to your sanitary ware division?
We are already seeing some signs of that. I think the spend is starting to come through. I think government and province still have some capacity issues in terms of getting the spend through, but there are already some signs of improvement.
And how about payments on those public sector projects? Is there any problem with that? I know with some of the big construction groups, there have been delays in payments. Are you seeing payments coming through on time?
Yes, luckily we don't supply the government directly. We have intermediaries, so we would supply wholesalers or retailers who then supply into that market. So we are collecting our money, yes.
Like just looking into the second 6 months, you said that turnaround has started for the consumer, particularly for the renovators market. What would you expect for the full year?
For the full year, I think because of the base, the first 6 months being so low on the comparative, we're obviously not going to do the kind of percentages. But I think in terms of total earnings, we should be able to hold the kind of numbers for the second 6 months that we've done for the first 6 months.